Hey guys, Akil Stokes here, and thank you for joining me for another edition of The Trading Edge. If this is your first time joining, my name is Akil Stokes. I'm a Forex trader, a trading coach, and one of the co-founders over at tier1trading.com. And The Trading Edge is a video that we put together for our traders, sharing with them the opportunities that are on our radar. Now, in this weekend edition, I split it up into two versions. I have the full version, which is available for our Tier 1 Premium and Tier 1 Trial members. Today's version is about 35 minutes long, so grab some coffee. And then on YouTube, I do a shortened version as well, where I try to pick out one of the pairs that we go over in hopes of providing you guys with some insight on how I analyze the market and hopefully a valuable lesson that will kind of help you out in your trading journey. So before we get into today's video, I want to start off by really talking about a comment that I got here on YouTube. And it was a trader that listened to a recent episode of my podcast, cleverly titled The Trading Coach Podcast. Brilliant, I know. And he said that, Akil, basically, you can tell you're not a real trader because you coach and teach high school on the side. Now, I don't coach or teach high school. I am a track and field coach at the college level. However, I thought it was an interesting opportunity to educate this trader, right? Instead of ignoring him or firing back with something cruel, I thought it was the perfect place to educate him and educate others as well, where the point of trading is to pursue your passion in life. Yes, I do think you need to be passionate about trading. There's a long learning curve, and if you're only driven by money or you don't have a true love for analyzing the market, I think it's going to be difficult to get through. But trading is a tool that you can use to achieve other things in life, whether it's philanthropy, and it gives you capital to donate or do research of your own on different causes, or whether it allows you to get away from a job that you hate, or at least reduce hours at a job you can hate now because you have this side income coming in. And for me, it was track and field, right? I started coaching track and field right out of college, and I absolutely love it. I'm a sports nerd, so I always love sports, but it's also a chance for me to work with really kids that are at the most developmental stage in their lives, and not developmental as far as like a baby and learning stuff in their brain developing, but at a chance where they're going from the age of about 17 to 21. They're making that transition into independence and going from a boy or a girl to a man and a woman, and getting ready to really enter the workforce or enter real life. And the experience that I have working with them and helping them get ready for that moment are very valuable. So coaching is always something that I want to do, and the fact that I coach a sport is even better. Realistically, however, coaches don't get paid, and assistant coaches don't get paid at all, basically. So going into trading and being able to form a career and grow a business out of my trading allowed me to have not only the financial freedom to do what I want to do coaching wise, but it also opened up the freedom of time. Here's a quick story for you, and I apologize for getting too long-winded, but I did an internship during my grad studies, and I did so good a job at it. This was the one I told you where I would get coffee for the person like 6 times a day, and I started timing out when exactly he wanted his coffee, and I'd have it for him piping hot before he could even ask, right? The little things. I was so good at that internship that he wanted to hire me on the spot. He said, Akil, we have this position opening. We have a new branch opening up. I want you to run it. Are you interested? And of course, how much does it pay and blah, blah, blah. And it was a good salary for someone coming right out of college. But being the stubborn and sometimes stupid person that I asked, I said, hey, I coach track on the side. I would love to keep doing it. How is the flexibility in the schedule? Can I still do this? And he was like, well, no, you'd be needed at the site from 8 o'clock in the morning or 9 o'clock in the morning till whatever time at night. So you can't kind of branch off and coach track. And I said, well, I'm not interested. Now, again, stupid decision. You're leaving a very nice salary, very nice benefits on the table. The whole point of going to college is to get a job, right, and whatnot. But at that point in my career, I'd worked so long, I've been working since I was a little kid, I was fed up with working for other people. I was fed up of doing stuff that I didn't want to do. And my whole goal in life was to only do stuff that I wanted to do. And I wanted to coach track. So I said, no, I want to coach track. I'm going to find something that fits what I want to do instead of needing to sacrifice my passion, my love for a job that I'm not very passionate about. And that encouraged me to take trading seriously. It encouraged me to make it into a career and grow it into a business, because the cool thing about trading is I can make my own schedule. I have the flexibility financially to do what I want. I have the flexibility of time where I can do whatever I want, whenever I want as well, whether it's coaching track and field, whether it's spending time with the wife and kids, whether it's little things like watching a piano recital in the middle of the day instead of needing to ask my boss for time off. So I thought it was a good chance to educate that trader or whoever he is, and I think it's a good chance to educate you guys as well on what is your why. Why are you doing this? It has to be more than make a lot of money. There has to be a deeper why, because that why is going to be the driver that keeps you going when that journey seems dark. Now, if you like that and you want more information on it, we did a podcast on it, myself, Jason Grayson, and Darren. I think it's Trading Coach Podcast episode 122. Check it out if you want to see more of that conversation with the three of us on that subject. Now, without further ado, I meant to keep it short. I'm sorry. I love this stuff, and I think this is more important than actually trading. But let's kick you into the video. Again, Tier 1 members, you get the full version. So we're going to start off talking about the news, big news week ahead, Wednesday and Thursday, so be on alert. And YouTube members, I'm going to find what I think is one of the most valuable pairs that we looked at, and I'm going to show it to you guys. All right, let's hop into it. But before we do three things for me. Like, it takes 1 second. Subscribe, it takes 2 seconds. Leave a comment, 3 seconds maybe. But invest 5 seconds in basically just saying, hey, I appreciate what you're doing, Akil, and I appreciate you guys doing that. All right, let's get to the video. Dollar Canada, another disappointing pair here. Just missed my entry on the bat pattern before rolling over to hit targets, and that was a mistrade. Not a mistrade, a trade I just didn't get involved in because the market ran away without me. But we have rallied off of that level. We had some Canadian news come out today, and we are back into our previous level of structure. And there are two things that we could look at as the market comes into this level. One, we can look for a counter trend trading opportunity. We can look for some relief. This is a very big candle. This candle went from 133.20s to basically 134.20s, a 100 pip candle. As a counter trend trader, we can anticipate some relief, and what that means is the market gives us a little bit of a pullback, right? Now, if you guys have been through the foundation course, we've talked about understanding why the market does what it does, right? So for you guys that are asking, hey, Akil, why would the market pull back from this level? And there are two reasons for that. One, it is a previous level of inside structure. So no doubt there are some sellers that are looking at this saying, I want to get short the loonie, I want to get short Dollar Canada. Where is the next opportunity that I can get short at? They see this structure. This is an area where they kind of want to probe and see, if there's any type of reaction here. Two, the people that made money on the 100 pips going up, they're looking for a reason or a place to take profits. They're saying, hey, I got a good move out of it. It's Friday as well, right? We all want to go into the weekend with a clean sheet. Let's start taking some profit off. So you have two different parties looking at the same area. You have buyers who are looking at this saying there's probably some sellers up there, so I don't want to get too greedy. Let me take some profit off. You have sellers that are saying, oh, they're probably the buyers are going to take some of their profits off at that level. Looks like a good place to get short. And when you see those type of, when the selling pressure flushes in from both ends, you see some type of relief in the market. Or on the other side, you see a big rally. So we can look for a potential relief there. Or if we break that level, if we violate that level, we could look for the next push up, which is going to be to these highs up here, about $1.35. That's a little bit more risky because you can see that we're coming into a previous level of consolidation here. So the target taking isn't as clear as saying there's a clear highway to this path. It could be a little dirty, but I would anticipate a move to retest these highs again, 135s, maybe 134.80s right below that level. So two opportunities here on the loonie dollar Canada. So speaking of relief, right? So you can see we're running into previous structure highs right here. As mentioned on the previous pair, the RSI is overbought. I don't need to go into another spiel about the overbought. It doesn't mean it will reverse. It actually means there's a lot of strength in the market. But seeing how we anticipate that and the prediction that we make in the market, it is a sign that says, hey, pay attention for a reversal. So counter trend traders, be ready for some relief at this level. Now, kind of going back to the two ways of trading it, I guess one would be a counter trend way, one would be a trend continuation way. The counter trend way would be simple, right? You look for your entry reason, you look for what you need for the market to show you that we're more likely to reverse than not reverse, and you look to ride that down. Now, where would I ride it down to? I would ride it down to this level right here, and who can tell me why? Tell me why? 133.60s. Who can tell me why? All right, two things. One, this is our previous level of structure, right? We have a level right here where the market previously found support and previously found resistance, right? We came down, we bounced off this level. I don't even know if there's anything looking left, probably. Look, what do you know, right? Usually that happens. We have structure looking left, right? We come up this level, boom, we come down here, right? Which once was support, now turns to resistance. We hit this level here. This was the level that we talked about all week. That was right above our bat pattern that just missed. And then we rallied down from that level. So if we are going to retrace, right, there's a good chance that we'll come back to this 133.60 level. This can also be the left shoulder of a head and shoulders pattern. For you guys that are familiar with the head and shoulders pattern, it's a classic reversal pattern in the market. Left shoulder. If we're going to get a symmetrical right shoulder, there's no saying that we will get a symmetrical right shoulder, but in the best head and shoulders patterns, you see some symmetry in the markets. And in every pattern, I would say that the best of every pattern, you see symmetry in the market. And that goes for the head and shoulders as well. So if we see a symmetrical shoulder here, it should come down to that level too. Lastly, we can take our Fibonacci retracement tool, swing low to swing high, and you can see there's a 3D2 at that level as well. So finding confluence, using those tools that we teach you in the course, not just to randomly draw them on, but using them, or I should say this, not just to use them as signals, right? I can care less about a Fibonacci on its own. It means absolutely nothing to me. But the power, in my opinion, comes from when you use it to complement what you already have. When you already have price action, you've analyzed it, you have structure, you've made predictions, and now you're looking for clues, right? Think of it like a detective, right? A detective that has a theory on who did it, who done it, right? And they have this theory, they're like, this evidence points there, but if I want to take it to court, I need as much evidence as I can get. So then you start using your other tools, and they all start giving you evidence that all points in the same direction. Doesn't mean you're going to be right by any means, not at all. But trading isn't about being right all the time, because here's the secret. Nobody's right all the time. But the key is you want to be, it's not even you want to be right more than you're wrong, but you want to put money at risk, right? You want to enter trades when you have the edge. And for some people, the edge doesn't come with a high win percentage. It comes with just an amazing risk reward. For other people, the edge comes from when you're in a position where you're more likely to be right than be wrong. If I see this particular pattern formation, or if I see this amount of confluence in the market, then the market is more likely to do this than to do that. And when you put it in kind of trading terms, right, and profit and loss, right, price is more likely to, from this level, if the market does blah, 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 price is more likely to rally to my profit level before it sinks to my stop level. And that's what good trades are made up of. And again, it can be different per every person, but the more confluence, the better, in my opinion. So That could happen, and that's a good target taking level. That'll give you a run from about 134.20 to about 133.70, so about 50 pips of potential profit in there. Not bad for an intraday trader. Really good for the dollar Canada, which is a slower moving pair. Extremely good compared to the year of low volatility that we've had in the market. 50 pips is that's a big move compared to what we've been seeing this year, especially on this particular pair. Now, speaking on the other side, again, two things you can look for if you're looking for longs. One, you can trade this as a head and shoulders. You can be aggressive at the right shoulder if you want to. We've spoke about how to do that before. Or you can wait for the break of the neckline in a more traditional sense and trade that up to the 135, 138.40 level. Or this head and shoulders may not even happen. Shoot, for all I know is the market can rally up here, right? That higher high, higher close will give you the opportunity to look for more of a classic pullback trade and then a chance to get long throughout the week. So different ways that this can set up throughout the week. It's good that, just like last week, or 2 weeks ago, we had a crap load of head and shoulders patterns that we've identified in advance. The more in advance that you can identify this, the more you can run through those different scenarios. And that's the one of the big differences between consistently profitable traders and struggling traders. Struggling traders don't have a set routine. They're not really dedicated to going through the charts and doing analysis each and every day. They'd rather just pop on a chart and be like, oh, this looks good today, let's do it, right? There's no thought process in it. And then they end up looking at their charts and being like, why did I do that, right? Raise your hand if you guys have ever been there. Me, right? Consistently profitable traders, professional traders, and I mean that as traders that take the professional approach, right? We're doing the same analysis each and every day on the market. So we're seeing these opportunities. Hopefully you guys are writing them down well in advance. So when you see this in the video this week, right? This trading opportunity, it may never happen, but it may not happen until a week from now, right? But you're running through those different scenarios in your head. If it does this, then this is how I react. If it does this, then this is how I react, right? If it does that, then this is how I react. We want to be predictive in our analysis, reactive in our execution. And as the market changes, right, we identify, right, we predict what we think is going to happen next, and we start running through, okay, how does that affect our way of getting involved or our way of staying out? And it gives you much more comfort in the market when you can approach the market and you know exactly what you're waiting for, instead of kind of making an emotional decision and being like, I don't want to miss it. Give it a try. But that's here on Canada. Of course, as we talked about earlier, when I went over the news, this is a Fed week. Big monetary FOMC statement and meeting coming up this Wednesday about what's going to happen in July. So depending on how long this takes to complete, it may be completely blown out the water by the time that news event takes place. So we'll have to wait and see. But that's dollar Canada for you. Let's go to Aussie dollar next as we make our way through our marathon of pairs. What do we do? 1, 2, 3, 4, 5 already. Got about 1, 2, 3, 4, 5, 6, 7 to go. But we'll get through it. Aussie dollar. All right, guys. As always, thank you for watching. I hope you learned something, meaning I hope you came out a little bit more knowledgeable than when you went in. If you did, do me a favor, hit that like button, subscribe if you're new, leave me a comment, and please share this on social media. Lastly, I got a pretty cool podcast coming out on Sunday, most likely. I did an interview with Michael Lamothe this morning talking about mindset, talking about the 10-year journey he took to become a successful stock trader. Woo! And he's going to share a few kind of his insights on what it really takes to be successful. So that should be coming out this Sunday. Make sure you check it out. Trading Coach Podcast, episode 197, maybe? I don't know. 3 times a week. There's too many of these things. But make sure you check that out. All right. Until next time, plan your trade, trade your plan. And I hope you guys have a great weekend.